All right, guys, thanks for joining us today. My name's Hannah Perkey. I run Evelo team and I'm here with Bob, and we're going to give you an update on what's happening in the real estate market with data through the end of June. So, Bob, I'll just have you get started. Can you tell us what happened in the local housing market in June here?
Yeah, let's get right at it. So we've been doing this for quite a while now, but first up is that median sales price. So June ended in our market at 320,000, which was about 1.6% over where we were in June of 2024. Next up is that median days on market. So we ended there at 10. Last June we were at 9. It's pretty close. I think as I kind of look at each slide, though, thinking back like January, February, we had gotten pretty close to 40 days. So it's just interesting to see that kind of cycle. We're used to seeing that in terms of the number of listings that come up and the number of sales, but obviously we're seeing a great big difference in the number of days on market. Month supply of inventory, we've gone up a little bit over last year, ended the month at 1.9. Last June, we were at 1.6. Again, keeping in mind a balanced market is about a 4 to 5 month supply of inventory. So still well under that, but definitely seeing a little bit of increase. And then we always like to look at that average list to sales price ratio. So for the month of June, that ended at 98.5. So that means on average, homes in our general central Indiana market sold for 98.5% of list price. Like anything, the average is just the midpoint, right? Add all the sales up, and it's kind of the middle point between, the high and the low average. So there are obviously different things that always impact that, but it's always good to keep track of that one.
Okay, very good. All right, so in regards to how the market's shifting, what factors have you been tracking to look at the shifting of the market?
Yeah, so as we've seen things change a little bit coming out of 2022, 2023, right? We were sort of the craziest from the 2020 through 2023. This one was the biggest surprise to me when I pulled the information together this week. Our active inventory crossed 6,000. At one point last year, we had crossed 5,000 for the first time in a few years. So interesting to see we've gone up. That is a pretty big jump from where we ended June of 24. That's up 25%. And you can see this time last year, we did not have that 5,000. So that was probably the biggest change to me. So we'll kind of see how that goes moving forward. Along with that, though, closed sales were up almost 10%, so a little over 3,200 units. And last year, we were a little under 3,000 units. So another interesting one there. The number of new listings, not surprising. If our active inventory is up some, our new listings will probably be up some. So a little over 3,900 units, which was up about 6% year over year. And the last one in this little batch that we like to take a look at, we look at that average list price to sales price ratio, but what we also like to look at is the percent of listings that are still closing above list price. I think that's important. Like anything, real estate is very hyper local. So there are some areas where every listing almost is still selling for over list price, but in the market overall in central Indiana, 21% of our listings sold for over list price. So even though the average is 98.5, we still have almost a quarter of the sales, 20% of the sales roughly, that are closing above list price.
Yeah, and like we always say on these calls, we can get hyper local, I would say, pretty narrow down the results pretty closely if you're considering selling to tell you what's happening where you live and what those numbers look like to help you make good decisions in selling your home, pricing, waiting, as it might be in some cases. So, all right, interest rates is a common one we get asked about. So, where are interest rates currently?
Yeah, so we ended right now. We're just a little bit down from where we were at this time last month. So this time last month, we were 0.12% higher than we are now. So we were at 6.84. Where right now we're at 6.72. Again, don't want to sound like a broken record, and kind of my final slide today will be related a little bit to this as well. But we saw some big spikes, almost all the way up to 8% back in November 2023. Then we kind of went down some, then we went back up to 7. But you'll see here we've been real consistent, and we've just been, I think, for almost the last year as we've done this, we've been plus or minus a half a point at most.
I mean, I think it's good for you to repeat that. We're still getting questions being in this industry about how are interest rates. And I was like, well, there's not really a lot to talk about. It's not a very attractive topic right now because it's just kind of stable and
Yep.
that's okay. So, all right, any final thoughts to share with us today?
Absolutely. And as I sort of alluded to, my final thought today is this exact thing, because we had a little chart cross my desk. So the little double dotted lines here, these yellow dotted lines, you'll see for going back more than a year, mortgage rates have just shown less volatility. So again, that gap has been less than 0.5% for a year now. And that's the least we've seen rates go up and down in, going back several years. So it's good to see. I think if anything, that just maybe stabilizes from a buyer perspective. At least you're kind of, if you're buying right now, you're probably going to be within that range, so it can really help
Mhm.
you set your overall budget, your monthly budget, and really let you know what you're capable of buying. Obviously it was a little bit more difficult. I'll excuse the extreme jump we had like 4 years
Yeah.
ago, but even like those, there were months in the last couple of years where we might have gone up a whole point in 1 or 2 months, right? And that's pretty hard to predict what your budget and might look like if you jump up
Mhm.
a point within that short of a span of time. But now that we've been real stable there, within a half point at most over the last greater than 12 months. Again, if you've been sitting on the sideline, not to sound like a broken record, you're
Mhm.
not seeing 3% interest rates or 4% interest rates or probably even 5% interest rates anytime soon. We're still at very historically low levels in comparison, not in comparison to obviously where we were in 2020, but where we have been historically since mortgages have been in existence. And now that we've
Mhm.
kind of stabilized, might be an opportunity as inventory is also increasing,
Yeah.
for you to come in and find what you've been looking for.
Absolutely. I mean, I think it's a great market, and people probably think we say that in different cases, but I'm like, it is kind of nice for the home buyer to be able to breathe and take the time to go out and look. I was talking to a past client about that the other day of like, yeah, you don't have to feel like you have to go crazy or rush out. You can really find the right home and take your time doing that. So thanks for sharing that. I love to make sure people know what that information is. So thank you, Bob, for putting all the data together. Thank you guys for joining. We'll summarize this on Instagram if you want to check out that data. And we'll be back next month. So if you have any other questions, you can comment below or send us a direct message and we'll get back to you. Thanks so much and have a great day. Bye-bye.